Hello, and welcome to Chapter 6 and 7, Comprehensive Problem. So I'm Sheree Bergeron, and we're going to be going through steps 1, 2, and 3 in this video. Then there'll be a separate video for steps 4, 5, 6, and another one for steps 7, 8, and 9. So let's get started. So the first instruction says journalize the entries. So you're going to look here, and we're going to journalize these entries. When we journalize in a journal. So you can look here will be our journal. We have 3 pages worth of a journal. Our regular journals will be on page 1. Our adjusting journal entries will go on to page 2. And our closing journal entries will go on to page 3. And then the instruction will say to post to the ledger. So our ledger is our accounts, and we will post to here. And then each time you post to a ledger, we need to make sure that we're in balance. And we'll do that by preparing the trial balance. So let's get started. Okay, so if you're doing this on paper, you'll have these printed out and you can sit them side by side. Since I'm doing this in Excel, I'm going to click on View and I'm going to click New Window. What this is going to do is let me to minimize one screen and look at another sheet in a separate window. So I need to go to my journal. And this is actually the same spreadsheet. So anything I do here is also affecting right here. Okay, so I'm just looking at it in separate windows. Just makes it easier. All right, so the first one, January 1. It says that Toby, the owner of CRT, contributed $40,000 to open his new business. He plans to resell fidget spinners. So anytime an owner puts personal money into the business cash increases. And Toby, capital increases because he put personal money into his business. So cash goes up with the debit and capital goes up with the credit. All right, and then the second January 1st entry says that Toby purchased equipment in their inventory racks for $6,000. Now, since I'm not sure what my options are for journalizing, I'm going to go look at my ledger to see my account names. So when I click on ledger, I can see that I have cash and merchandise inventory and equipment. That's the account that I want to use for these merchandise racks because those are my only assets that I see. So that's a good one to use. All right, so since I purchased equipment, then I am going to debit equipment to make it go up. And I'm going to credit cash because it doesn't say on account, so I can assume that it's cash. And again, that cost me $6,000. All right, and then on January the 2nd, it says that I purchased merchandise inventory for $10,000. That was 10,000 fidget spinners at $1 each. So that's merchandise inventory to me because I plan to resell it for $10,000. And we'll use that breakdown in just a few minutes. And cash goes down because I paid cash. On January 3rd, I decided that I wanted some more fidget spinners. So I bought some more merchandise inventory. But this time it cost me more. They were $1.50 each. And I still bought 10,000, so I spent 15,000, it says. All right. And then on January the 4th, I sold some of my fidget spinners. So whenever you make a sale and you're using the perpetual method of inventory, you're going to have 4 entries. So you're going to have cash and sales for the sales price. And then you're going to have the movement of inventory, which is cost of goods sold and merchandise inventory. And I skipped a step, and I tell my students never skip a step. So it says to do, update the FIFO inventory chart for purchases and balances. I've got to do that before I can account for this sale. So let me back up right here and update the FIFO inventory chart for my purchases and balances. So I go to my FIFO inventory chart. On January 2nd, I purchased 10,000 fidget spinners at $1 each, so that was $10,000. And then on January the 3rd, I purchased 10,000 at $1.50. All right, that's 15,000. After I do anything, I need to get a new balance. And so when it's FIFO or LIFO, you have to keep your purchases separate when they're at different prices. So my first one is that I have, I need to put balance right there, 10,000 at $1, which equals $10,000. And I have 10,000 more at $1.50, which equals $15,000. Now this looks like a complete duplication of what I just did, but it's just important because this is my new balance. So I don't need to look up any further than that. This is my balance. Now I'm going to sell them. So I sold 12,000 fidget spinners for $3 each. So to figure out which price level I sold, I'm going to be looking at the first ones and then the second ones. So I sold my first ones first. So I'm going to sell all 10,000 at $1, and that equals $10,000. And I want to sell a total of 12,000. So I need to sell 2,000 more at the $1.50 level. So that's 3,000. Now, I've shown you that I actually don't want to show my total balance except for on the last row. It just makes it easier to read. So I'm going to multiply across and then add and then multiply across. So I get the $13,000 right there. This is my sale. All right, I always do a balance after I do anything. So now my new balance is I don't have any left at 10,000 for $1. But I do have some of the $1.50 ones left. I had 10,000, I just sold 2,000. That means I have 8,000 left at $1.50, and that's my balance right now. All right, so what does this mean as far as my journal entry? Well, your inventory flow chart is telling you the cost of the goods that you sold. So this 13,000 is telling me the cost of the goods that I sold. So it's going to be this number. All right, so how do I tell my cash and sales? Well, that's my sales price, and it told me that I sold them for $3 each. So 12,000 times 3 is $36,000. That's my sales price. So what I have here is I sold to my customers $36,000 worth of fidget spinners, and I paid $13,000. So the difference in that is my gross margin, otherwise known as my gross profit. All right, let's keep going. So I sold that, and then I updated my FIFO inventory chart for the sales and the new balances. I did that. So now I can go on to January the 5th, which says that CRT paid $1,000 for this month's utility expense. So I have utility expense, and expenses go up with the debit, and cash, and it said it was $1,000. Cash goes down with the credit. All right, and then on January the 6th, I paid salaries to sales clerks. So expense goes up with the debit. And if I look, I believe this is called sales, salaries, expenses, expense. And if I look, it's cash. All right, so that's $2,000. Expenses go up with the debit, cash goes down with the credit. And then on January the 7th, I purchased some more inventory. So merchandise inventory goes up with the debit, and cash goes down with the credit. How much did I buy? $17,500 this time. All right, and I am going to read my instructions, and it says, update the FIFO inventory chart for the purchases and the new balances. So I'm going to go to my FIFO inventory chart. I have a purchase. I bought 10,000 at $1.75 each, which is $17,500, and now I need to get a new balance. All right, so I still have my 8,000 at $1.50, and I also have my 10,000 at $1.75. So that is my new balance. All right, and now I'm ready to do January the 8th, so I'm going to go back to my journal. And January the 8th says that I paid rent for $4,000 for store rent. So that is rent expense and cash for $4,000. Okay, so we finished journalizing, and the next step says to post the entries to the ledger. So we have to post these to the ledger so that we can affect our accounts. So I'm going to put my journal over here, and notice that I'm in the same sheet, so it updated. And then I'm going to put my ledger over here so that I can easily see everything that I need to see. All right, so to post, we go line by line, and we just copy these to the ledger. So cash was debited. This is our cash account. So we're going to put in our date of January 1, and we're going to debit it for $40,000, and we're going to get a balance, not 400,000, 40,000. The balance column is how much cash do we have right now? Well, we started with nothing, and we just added 40,000, so we still have 40,000. All right, this came from journal page 1, so I put in a 1 here. And then this went to account 100, so I put in a 100 right there. Okay, so we finished that line item. Now we go to Toby Capital. So we're going to scroll down to Toby Capital. This is still January 1. This came from page 1. This was a credit of $40,000. And this is a $40,000 balance because we started with nothing and we added 40,000. So at this point, what I would suggest that you do is pause the video and work through, post all of these, and then check your work afterwards. All right, I'm going to keep going. So equipment, we debited it on January 1 for $6,000. That came from page 1, so we have a balance of $6,000. This went to account number 110. I just realized I forgot to put in my to account number 300 right there. All right. 110 goes to equipment. Okay, now let's do cash. So I'm going to scroll up to cash. January 1 came from page 1. I credited cash for $6,000, so my new balance is a debit of 40 and a credit of 6,000. So that means that I subtract, and it stays on the debit side because 40 is bigger than 6. So I've got 34,000. That went to account number 100. Merchandise inventory is on January the 2nd, and that came from page 1. It was a debit of $10,000. So I've got a debit balance of $10,000. That went to account number 102. Next, I'm going to post cash. So that's going to be January the 2nd. And it came from page 1. That was a credit of $10,000. So I have a debit and a credit. So I subtract $24,000. That went to account number 100. Merchandise inventory is next. That is on January the 3rd. And it came from page 1, and I debited it for $15,000. A debit and a debit we add. So my new balance is $25,000. That went to account number 102. Next, I post cash. Cash was on January the 3rd. From page 1, I credited it for $15,000, a debit and a credit, so I subtract, and my new balance is $9,000. All right, and that went to account number 100. Now I have a sale, so this time I got cash, so I post cash. That was January the 4th. From page 1, a debit of $36,000, so I'm replenishing some of my cash, thank goodness. A debit and a debit we add, so my new balance, not in that column, how about in that column, 9,000 plus 36,000 is 45,000. That went to account number 100. Sales, which is down here under revenue, happened on January the 4th. From page 1, $36,000, credit balance $36,000. That went to account number 400. Cost of goods sold is an expense. So we've got January the 4th from page 1, debit of $13,000. So it's got a balance of $13,000. That went to account number 500. Merchandise inventory, which is an asset, so I go up. This is still January the 4th. From page 1, merchandise inventory goes down with a credit for $13,000. So a debit and a credit, so I subtract, and my new balance is $12,000. That went to account number 102. All right, utility expense. So I go down for my expenses, and that was on January the 5th. From page 1, debit of $1,000, so it's got a balance of $1,000. and that went to account number 501. All right, cash, so I go up for assets. January the 5th, from page 1, a credit for $1,000. A debit and a credit, I subtract, so my new balance is $44,000. That went to account number 100. All right, sales, salaries, expense. So expense, January the 6th, from page 1, debit of $2,000, balance is $2,000, and that went to account number 502. All right, cash, so I'm scrolling back up. January the 6th, from page 1, cash credit for $2,000, so a debit and a credit I subtract, so 44 is going to go to $42,000. That went to account number 100. All right, just a few left. Merchandise inventory, January the 7th, from page 1, $17,500. I really replenished my inventory here, didn't I? All right, so did that in the wrong column again. 12,000 plus 17,500 is how much I have, so I have a total of 29,500, and that went to account number 102. All right, cash, January the 7th, from page 1, credit cash 17,500, a debit and a credit, so I need to subtract. My new cash balance is going to be 24,500. That went to account number 100. Rent expense is going to be down here with our expenses. January the 8th, from page 1, debit $4,000, balance $4,000. That went to account number 503. And then finally, the last one to post is cash. January the 8th, from page 1, credit my cash for $4,000, and my new balance for cash is going to be $20,500. That went to account number 100. Okay, so I have finished posting my journal entries to my ledger. The next step is always to make sure that my general ledger is in balance. So I'm going to put my ledger over here, and the way that we find out if we're in balance is a trial balance. Because we have not made our adjustments yet, we are working on the unadjusted trial balance, which is just this point in time on this ledger. And that will come together more when you finish watching the next two videos. But for right now, we are going to do a trial balance for the ledger as we see it right now. All right, so trial balances are debits and credits because they're not financial statements. Remember, financial statements are subtotals and totals. Trial balances are in fact debits and credits. All right, so we've got a debit balance of cash. We've got a debit balance of merchandise inventory. We've got a debit balance of equipment. We've got a credit balance of Toby Capital. And if there's no balance, you don't have to write it on your trial balance. That's why you see some accounts over here that don't have a balance or not over here. You only have to list out the accounts that have a balance. All right, so sales is our next one with the balance, so 36,000 credit. Cost of goods sold has a debit balance of 13,000. Utilities expense has a debit balance of 1,000. Salaries expense has a debit balance of 2,000, and rent expense has a debit balance of 4,000. So to see if I'm in balance, I'm going to add my debits. So I'm going to add up all my debits, and I'm going to add up all my credits, and I'm going to see if I'm in balance. I'm not in balance. What did I type in wrong? Merchandise inventory, is that too high? By the way, this is exactly what it's supposed to show us, is what we're off. I have too much money over here, so let's go see why. So I've got $29,500 for merchandise inventory. Equipment, oh, look at that. So here I typed in the wrong balance, and this can easily happen. It should be 6,000, but notice that I put in 60,000. I'm leaving this error because I want you to see how that trial balance helped me to find that error. Now I'm in balance. So it helped me to find that mistake that you may have caught earlier when I was typing. So probably lots of you guys did, but now I found my error as well. Okay, so that brings us through step 3. So let me know if you have any questions. And there will be another video for 4, 5, and 6, and another one for 7, 8, and 9. Thanks.